Well, it faded in April. It seems like things are finally looking up. But let's address more earnings. And we've got Brigade Enterprises, another set. It's been an overall weak set from them. Let's try and analyze and dig deeper. We've got Pavitra Shankar, the MD, joining in on the show right now. Pavitra, hi, morning. Welcome to ET Now. Just going through
Good
your
morning.
numbers, Pavitra. It's been a weak quarter for you. The full year pre-sales as well have seen a little bit of a dip of about 6%. Tell me what went behind the performance in the quarter gone by.
Sure. Actually, in terms of the quarter gone by, it was a pretty strong quarter. In terms of we did sell 2 million square feet with over 2,500 crores in booking value. For us, in terms of the full year, we did see a delay in many of our approvals, and that is predominantly the reason why our annual numbers saw a bit of a dip. But in terms of realization, which is the average realization per square foot, we still were able to show an increase of around 13% year over year. So in general, the trends are good. We did have a heavy dependency on launches, which is something we had been talking about in the previous quarters as well. But we do see demand on ground to be still pretty good. And we're confident that with the launch pipeline coming through, we should be able to continue to show good numbers. So really, it was a timing difference for us on the financial year, but quarterly, we were able to do pretty well in terms of overall numbers.
Okay. Pavitra, hi, morning. Can you give us a sense on what the forecast would be for pre-sales in FY27? And other than residential also, how are you expecting the commercial segment to shape up in FY27?
So on the commercial segment and hospitality, of course, both have done very well over the last year in terms of showing revenue growth and EBITDA growth. In the coming year also, we expect to see the office market do pretty well. There is, despite all of the conversations going on, there is still a good appetite for leasing. And in terms of absorption, numbers have been good, especially in our target markets of Bangalore, Chennai, and Hyderabad. On the residential side, yes, we do want to grow substantially. Our typical, estimate is to grow 15% year over year. While we did miss that over the last year, we are gunning for a substantial increase. Again, a lot of dependencies on the geopolitical scenario and also on what domestically the oil prices and fuel price situation would be going forward. We are yet to see how that really pans out post all of the elections that have happened.
Okay, so that's your outlook on how FY27 could shape up in terms of pre-sales, but also talk to us about your launch pipeline. You have announced that you're going to be launching 14 projects across Bengaluru, Chennai, Hyderabad, as well as Mysuru in FY27. Can you tell us what the expected launch timeline is going to be for all of these projects? And if you could give us a rough sense on what the combined GDV is?
Yeah. So in total, it's about 11.5 million square feet of projects across these four markets. While today our inventory and average APR is north of 12,000, the upcoming launch mix, the APRs would be a little more skewed towards mid-segment. So assuming around a 10,000 rupees per square foot APR. So the GDV would also be around 11,500 crores or so. While there are 14 projects, 3 of those are in Mysore, which are fairly small. So of the 11.5 million square feet, 4.5 million of that would be from Bangalore, and another 3 million from Chennai and 3 million from Hyderabad. These are the larger projects that we would be launching in our core markets. And again, we're looking at a similar kind of GDV applying a 10,000 rupees per square foot average value. As similar to the past, we have had a lot of dependency on launches pushing more into H2. We do have visibility for a couple of launches in H1, but again, we are seeing a lot of the launches coming into H2 for the financial year. We, of course, will be pushing to pull up as much as possible so that we can get that visibility for the financial year as well. But we do also have an opening stock of around 7.5 million square feet, which we will be looking to monetize during the coming year also. So both given that we have the opportunity to do that for our sustenance portfolio as well as our launch portfolio, we would be pushing pretty hard to increase our numbers this year from a pre-sales value perspective.
Pavitra, how much would be the execution in this quarter and delivery that you are expecting in FY27?
So in terms of FY27 or in terms of annually, we expect to do a few million square feet every year. So as of now, we have around 100 million square feet of projects. Sorry, we have around 31 million square feet of projects under construction. So we're looking at doing about a few projects completion every year.
It's rough guidance of how much of delivery in terms of square feet that will happen. I'm looking from a point of view of cash flows which you're going to recognize as part of the delivery and execution.
Yeah, potentially about 3 to 4 million square feet of completions.
And that would mean in terms of cash flows, how much will you be able to recognize?
I'll have to come back because that is really a mix of what we can actually register in terms of customers coming forward for registrations as well.
Okay. Pavitra, help us understand. You've recently announced a partnership with Bain Capital to develop a premium mixed-use project in Bengaluru. What is the expected revenue and launch timeline of these projects? And are you also looking at further partnerships like these? Is that something that you are actively looking at the moment?
Definitely on the commercial side, for large capex projects, it's great to have a partner, especially quality partners like Bain. We do have an existing portfolio with GIC, so naturally our intention to work with high quality partners is definitely there. We're very happy about this particular project. It is overall an investment of 2,200 crores. It is predominantly an office project with a 5-star hotel, a total of around 2 million square feet. And hotel of we're looking at the design, but probably north of 200 keys in a core part of Bangalore, which is also metro connected. So we're quite positive about this. And as I mentioned, from an investment standpoint, 2,200 crores, and we would look to finance about 50% of that with construction financing.
Okay, so that looks good. Can you also talk to us about what the current pricing environment is and the like-to-like price increase that you're witnessing in Bengaluru as well as the other key cities? Basically, the realization, how is that shaping up?
So I'm assuming on residential. So
Yes.
in our own portfolio, we've seen that grow, on an annual basis, 13%. But some of that is from a product mix as well. So if we're looking like to like, it's more like a 9 to 10% year over year, and that's that's kind of the same regardless of which market we're operating in. So whether it is Bangalore, Chennai, or Hyderabad, we're looking at that kind of range for like to like product.
Okay, and lastly, Pavitra, also in light of the disruption that we've seen in West Asia, are you seeing any slowdown in inquiries coming in from potential buyers? Because we've been speaking with a few players on ground and most of them have been indicating that demand has taken a little bit of a hit. The sentiment has deteriorated on the back of this West Asia war. Are you seeing something similar play out on ground?
So we're seeing a different mix of inquiries. I'd say there's more inquiries coming in from NRIs in terms of looking at India as an investment option. One, supported by the geopolitical scenario. Two, by the depreciation in the rupee as well. Domestically, also there is I wouldn't say a drop in inquiries, but rather more time taken to close out a transaction. And again, I think we're all pegging towards the last, 3 to 4 years where the market was extremely buoyant. So I think compared to that, we are all seeing time is, there is more time being taken to close the transactions. Supply also is something that most developers have been able to put into the market while there is launch dependency. So customers do have time and do have choice. And that's what we're seeing. But in terms of conversion rates, that is still pretty healthy. So I think it's really just a matter of, managing the expectation in terms of time taken to close a transaction. And, from a lead perspective, I think we're still doing well. There's less of speculation in the market, I would say. So it's going more towards end user demand. So as a result, we may see less of leads coming in from speculative investors.
Understood. Pavitra, great to be speaking with you today. Thanks as always for your candid chat.
Thank you.
Okay, let's take a very quick break. We'll be right back, continue tracking markets on the other side.